Analysts are calling a, hold on, what was it? Oh, yeah, Santa sell-off.
Yeah, you really got to wonder where they come up with these names, right?
You said it! Anyway, hopefully by the end of this deep dive, things will be a little clearer for everyone. One thing I find interesting is that gold is making these big moves, but the stock market's giving off some seriously mixed signals. What's your take on that?
Well, it's fascinating, right? Because on the one hand, you've got this analyst we came across who's predicting a sell-off. He's basically saying, don't get too cozy with this rally. It's not going to last.
So is he saying everyone should just prepare to be disappointed come holiday season?
He's got some compelling points. I mean, he's not just pulling this out of thin air. He's looking at historical data, where he thinks the economy's heading, and he's even using some pretty in-depth technical analysis to back up his claim.
Interesting. But gold, though, right? People always call it a safe haven asset, but is it really?
What?
It's jumped from $300 to $1,800 an ounce in just a couple of decades. That's even outperforming the S&P 500. So are we looking at a gold bubble? Or is there something more, I don't know, fundamental going on here?
It's definitely not just random chance. There are several things coming together right now that make gold really attractive to investors.
Like what?
Well, first off, the U.S. dollar has been on a bit of a downswing. This makes gold comparatively cheaper for investors using other currencies, which naturally bumps up demand.
Okay, that makes sense.
Then you've got falling bond yields. With interest rates going down, those classic safe haven investments like bonds just aren't looking as good. So some investors naturally look for alternatives, and gold is often right there.
And of course, there's gold's reputation as an inflation hedge.
Exactly. When currencies start losing their buying power, gold's tangible value, its history, tends to hold up. And we can't forget about the fear factor.
Right, because it feels like the world is a little shaky right now, wouldn't you say?
Definitely. And when things get uncertain, people turn to gold. It's like that old saying, in doubt, buy gold.
And speaking of history, isn't it interesting how the discovery of gold is actually tied to the discovery of Australia by European explorers?
It's true. Gold has been a major player in shaping the world as we know it, and for a very long time.
So we've got to ask, what about Bitcoin in all of this? The whole digital gold thing, it's been surging too.
Yeah, and it's really interesting to see how closely it's mirroring gold's performance. They're both seen as hedges against traditional financial systems. And as we've been talking about, maybe that's why they're both getting so much attention right now.
And one of the big things they both have is that limited supply.
Right, just like gold. Bitcoin can't be endlessly printed by governments. That's a huge draw for people who are worried about inflation or, central bank policies.
And we're seeing younger investors, especially millennials, really get into Bitcoin.
Absolutely. Platforms like Square's Cash App are making it easier than ever to get involved.
So whether it's physical gold or digital gold, like Bitcoin, the big question becomes, where do you put it all? I mean, keeping it under the mattress doesn't exactly scream secure, does it?
It's definitely not the most, shall we say, secure strategy.
Yeah.
In fact, one expert we talked to strongly advised against storing any large amount of precious metals at home at all.
Understandably. So what are the options if someone wants to sleep soundly at night, knowing their investment is safe?
Well, beyond the whole under-the-mattress approach, there are professional storage facilities.
Okay, like what?
Brinks is a good example. They offer really high-level security, and their fees are surprisingly reasonable, around 0.3% annually.
So let's say you've decided physical gold is the way to go. But then there are those mining companies you hear about all the time. Are they a smart investment or more of a gamble?
That's the million-dollar question, isn't it? It really depends. Some analysts see those mining companies as a good value play, but others are calling them a potential value trap.
Yeah, that makes sense. It's not a simple answer.
Not at all. It's one of those things where you really have to do your homework. And it's not just gold miners either. Remember that whole thing with lithium and rare earth metals a while back?
Oh yeah, prices were all over the place.
Exactly. And that was all tied to that whole electric vehicle boom, right? That whole narrative about green energy and everyone switching to EVs really pushed up prices. But then, what happened? A correction.
Things settled down a bit.
Exactly. It's a good reminder that even the hottest trends can be unpredictable. And it's important to, look past the hype and really understand what's going on underneath the fundamentals.
Speaking of looking past the hype, it reminds me of that analyst we talked about earlier, the one predicting the Santa sell-off. His whole approach got me thinking about, other ways to think differently about the market? Like, what if everyone's looking at something one way, but there's actually a hidden opportunity there because of that?
That's often where the best opportunities are hiding in plain sight. When everyone's focused on the same thing, they tend to miss other, maybe less obvious possibilities.
It's like that saying, buy when there's blood in the streets.
Right.
Okay, maybe a little extreme for most investors, but you get the idea. So how do we actually put that into practice? Any real-world examples come to mind?
Well, take Perpetual, for example. It's an Australian financial services company.
Okay, I've heard of them.
Their share price had actually been dropping,
Mm.
partly because of some not-so-great decisions they made with their growth strategy.
So not doing so hot.
Not really.
Mhm.
But here's the interesting thing. This actually caught the eye of a well-known value investor, Washington H. Solpat.
He saw an opportunity where everyone else saw, like, weakness?
Exactly. What Solpat recognized was that Perpetual, even with its problems, still had some really valuable assets. And those assets, well, they were actually worth more than the company's share price seemed to reflect at the time.
Interesting. So what happened?
It led to a takeover attempt. There's even talk of breaking up the company.
Wow. So it wasn't about, like, predicting whether the market was going up or down. It was about seeing value that others were missing because they were focused on the narrative of Perpetual struggling.
Exactly. And that's a perfect example of how thinking differently, that contrarian approach, can lead to some pretty unique investment opportunities.
And how does that tie into the bigger picture?
It shows that even when the market seems to be on fire, there are always going to be pockets of undervaluation. And those are often created by the very trends everyone's chasing. It's like finding a $20 bill on the sidewalk when everyone's too busy staring at their phones to notice.
So we've got gold hitting new highs, a potential Santa sell-off maybe just around the corner, and Bitcoin trying to become the new gold standard. It's a lot to take in. What's the takeaway for regular investors like you and me? Should we be running out to buy gold bars and load up our Bitcoin wallets?
It's not about blindly following any one trend. The key is to understand those market cycles more than trying to, perfectly time them, which is almost impossible. And a big part of that is questioning those prevailing narratives.
So like if everyone's saying EVs are the future, the market can only go up from here kind of thing.
Right. It might be a good time to take a breath, look around and see if maybe, just maybe, there's another side of that story.
And that's where gold and silver come in.
Right.
That potential hedge against volatility in the markets.
They can. Absolutely. But even gold and silver should just be one part of a well-diversified portfolio. There's no such thing as a guaranteed win in investing. It's about understanding how much risk you're comfortable with, your financial goals, and then putting together a plan that makes sense for you.
So it's almost like we need to be like detectives or something, not just investors.
I like that. It's about looking for those clues.
Yeah.
Right? Connecting the dots and not being afraid to, challenge what everyone else is saying.
Don't just follow the herd.
Exactly. Find your own path.
Which kind of makes you wonder, is there a way to actually, make money from this whole contrarian thing?
Well, that's what Washington H. Solpat did with Perpetual, right? He spotted an opportunity that everyone else missed because they were so caught up in, what they thought was going on. And that's the beauty of the markets. There are always going to be these little, I don't know what you'd call them, inefficiencies, these little mispricings that pop up and create opportunities. But you have to be paying attention. And you have to be thinking differently.
So to be a contrarian investor, you've got to be able to find those overlooked, undervalued things. But how do you actually do that? Are there like signs to look for?
One thing to keep in mind is sentiment. If everyone's super bullish on something, well, that might be time to, proceed with a little caution. And then on the flip side, if everyone's hitting for the exits, that could be your chance to find a bargain.
Because when everyone's greedy, that's usually when the market's peaking. And when everyone's freaking out, that's often when the best buying opportunities show up. But it's easier said than done to go against the grain, right?
It definitely takes discipline, but it can really pay off, literally. Another thing to look for is what's called a catalyst. Basically, it's an event or some news that could shift how the market sees an asset.
Okay, so like what? What would those be?
It could be a new product launch, maybe a change in management, or even, something like a takeover attempt, like we saw with Perpetual.
So if you can spot a potential catalyst before everyone else jumps on the bandwagon, that could give you a real advantage.
Absolutely. It's like getting a sneak peek at the next chapter of the book, right? Before anyone else.
And those catalysts are probably even more powerful when they go against what everyone expects, right? For sure.
Like, for instance, those coal companies we were talking about earlier, they're basically considered sin stocks now.
Yeah.
But some analysts are starting to think they might actually be undervalued.
Yeah, and part of the reason is because everyone else is so down on the industry right now.
Interesting. So basically, that negative sentiment could actually be a good thing for contrarian investors.
Exactly.
It's all about looking beyond the headlines and really trying to understand the fundamentals.
Couldn't have said it better myself.
So to wrap things up here, it sounds like navigating today's market doesn't just require understanding the financial side of things. You almost need that detective's mindset.
Love that analogy. It's about being curious, being a little skeptical, and being willing to really dig in and uncover the stories behind the numbers. Well, we've definitely covered a lot of ground today. We talked about gold hitting those record highs, a potential Santa sell-off that might be looming out there, and even Bitcoin trying to, become the new digital gold standard. But if there's one thing I hope everyone listening takes away from this deep dive, it's this. Think differently about the market. Don't be afraid to be a contrarian. Question the so-called experts, and most importantly, develop your own investment philosophy.
Yeah, and remember, the best investment you can make is in yourself. The more you learn, the more you understand, the better prepared you'll be to navigate the markets and reach your goals.
Couldn't agree more. So keep learning, keep exploring, and hey, most importantly, keep asking questions. That's what we're here for.